What happens when you hand over your hard-earned money to a machine? For 30 days, I let artificial intelligence take full control of my stock investments. No human decisions, no gut instincts, just pure AI-generated picks. At first, I was skeptical. Can an algorithm really beat the market? But what unfolded over the next month completely challenged everything I thought I knew about investing. The gains, the losses, the unexpected turns, the results were anything but predictable. So was it a financial disaster or a breakthrough success? Let's dive into what happened when I let AI run my portfolio. This might just change how you invest forever. Today, we will talk about how I let AI pick my stocks for 30 days. The results were shocking. So before we get started, make sure to hit that like button, also subscribe to my channel. What if you handed over your entire investment strategy to artificial intelligence? No gut feelings, no research, no human decisions, just cold, calculated moves made by a machine. That's exactly what I did. For 30 days, I let AI control every stock I bought. The outcome? It was surprising in ways I never expected. 1. The decision to let AI take over. I had always followed the traditional investing path, researching companies, analyzing trends, watching financial news. But I kept wondering if all that effort could be replaced with something smarter. AI was already disrupting every industry, and finance was no exception. I kept seeing stories about how AI was beating human investors. So I made a bold decision. For 1 month, I'd hand over all my investing decisions to a machine. I wasn't looking for a get-rich-quick scheme. I wanted real insight into whether AI could outperform my human instincts. 2. Choosing the right AI platform. Before I could start, I had to find a trusted AI investment platform. I wanted one that didn't just follow indexes but made active decisions using real-time data. After reviewing several, I chose a platform that used machine learning, technical indicators, and sentiment analysis to trade. It promised precision and profit with minimal human involvement. I connected my brokerage account, deposited $1,000, and hit start. There was no turning back. The platform also gave me access to detailed dashboards and analytics so I could see why each trade was made, which built my confidence in the process. 3. The first trades were unexpected. On the first day, the AI scanned global financial news, historical data, and market momentum. Then it made its move. It didn't pick the popular stocks like Apple or Tesla. Instead, it went for lesser-known tech companies and a few energy sector picks. I wouldn't have chosen them myself, but this was the point. I had to trust the algorithm. I let it run. The trades were fast, precise, and often counterintuitive. It made me realize that AI isn't swayed by hype or headlines, just numbers. 4. Emotions got in the way early on. Within a few days, I saw wild swings in my portfolio. One day I was up 4%, the next I was down 3%. I wanted to pull out. I wanted to intervene. But I didn't. This wasn't about my feelings. It was about testing the AI. I had to remind myself that emotion is exactly what AI avoids. It doesn't panic sell. It doesn't chase hype. It follows data, and that's what made this experiment valuable. Human psychology often ruins investing strategies, but the AI was immune. 5. AI moved faster than I ever could. One of the first things I noticed was the speed of the AI's reaction to market events. The big policy announcement hit the news, and within seconds, the AI adjusted my holdings. While most traders were still reading headlines, the algorithm had already sold off certain assets and bought into others. It was like having a team of analysts working around the clock, reacting to every shift in real time. I couldn't believe how quickly it adapted. Traditional investors simply can't keep up with that pace. 6. Some picks were brilliant. After 2 weeks, a few of the AI's picks had gained serious ground. One obscure tech stock jumped 18% in a single week. Another energy stock rode a spike in oil prices perfectly. These weren't lucky guesses. The AI had predicted them based on patterns and economic indicators I didn't even think to look at. I began to realize that its ability to process thousands of data points simultaneously gave it an edge no human could match. It could see the big picture while I was still stuck in the details. 7. But there were losses too. Not everything went perfectly. There were moments when the AI got it wrong. One retail stock it picked tanked after a bad earnings report. Another biotech stock fell due to regulatory issues. These losses hurt, but they were part of the process. Unlike emotional traders who might double down or freeze, the AI took the loss and rebalanced my portfolio based on the updated data. It treated every trade like a calculation, not a gamble. I appreciated how quickly it cut its losses. 8. The final numbers were eye-opening. At the end of the 30 days, I pulled up my account's summary. I had started with $1,000. After 1 month of AI-driven trades, I ended with $1,187. That's an 18.7% gain in just 30 days. That kind of return isn't guaranteed and shouldn't be expected every month. But it was proof that AI could spot opportunities and minimize emotional mistakes. And this wasn't during some bull run. The market had been volatile. Yet the AI had still found a way to profit. That's what impressed me most. 9. What I learned from the experience. This experiment taught me more than I expected. First, AI isn't perfect, but it's powerful. It processes information at speeds humans can't compete with. Second, removing emotion from investing can lead to better decisions. Watching an algorithm trade without fear or greed was eye-opening. Third, AI can help average investors get access to strategies once reserved for hedge funds and institutions. And finally, trust in the process matters. I had to let go of control to truly see the benefits. The more I stepped back, the more the AI proved its worth. 10. Should you let AI invest for you? So, should you trust AI with your money? That depends on your risk tolerance, your goals, and your comfort with technology. AI doesn't guarantee profits, and it's not a shortcut to riches, but it's a powerful tool that can complement your investing strategy. Whether you use it to automate trades, analyze trends, or just avoid emotional decisions, it's worth exploring. As technology evolves, those who learn to use it wisely will likely be the ones who succeed. And even if you don't fully automate your portfolio, you can use AI as a decision support system. 11. The human-AI partnership could be the future. One thing I didn't expect was how well AI could complement human thinking. I began to see it not as a replacement, but as a partner. It gave me insights I never considered. It challenged my assumptions, and it pushed me to think differently about investing. In the future, I believe investors who combine human intuition with AI's logic will have the greatest advantage. It's not about man versus machine. It's about man with machine. 12. The role of data in AI investing. Another major takeaway was the importance of data. The quality, speed, and volume of data that the AI used were staggering. It didn't rely on a few indicators or past performance. They used real-time economic indicators, social sentiment, earnings forecasts, global news, and more. The depth of analysis was far beyond what any individual investor could do. It reminded me that the future of investing isn't just about who has the most money, it's about who has the most information and how they use it. Letting AI pick my stocks for 30 days was one of the most eye-opening financial experiments I've ever done. It taught me to rethink how I view investing. We're entering an era where machines might actually make better decisions than people, not because they're smarter, but because they're not held back by emotions, distractions, or outdated thinking. AI can process more data than any human ever could, and it does so without bias. It doesn't get scared when the market drops. It doesn't get greedy when prices rise. It simply follows logic. And in a world as unpredictable as the stock market, that kind of calm precision might be exactly what we need. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.